As we're closing in on a new year and ready to gear up, you might be wondering about the affordability in the housing market. With the fluctuating home prices, mortgage rates, and inventory levels, home ownership has the potential to make it through the dark, or not. Which way do you think this will go? Keep on watching to find out. There has been a decline in existing home sales even though housing prices have remained steady throughout the year. What is causing this? National Association of Realtors, NAR, reveals with its latest data, the extent of home sales has significantly decreased with an astonishing 15.4% decline compared to last year. In October of 2023, an annual pace of only 3.96 million sales have been recorded. Don't lose hope just yet. A decline in mortgage rates can come to the rescue. Could the current market conditions be due to external factors, such as economic uncertainty or a shift in buyer preferences? Or is there a more profound underlying issue in the housing industry? And before I reveal how the US housing market will be a disaster in 2024, please take 2 seconds to help me out and hit that like button and subscribe if you're enjoying this video so far. Each like and subscribe is fuel for the algorithm that helps support this channel. Thank you so much. Now, back to the top. There was a surge in mortgage rates in 2023 that didn't go unnoticed, and this has remained high throughout. Surprisingly, this surge is nearly double that of previous year's rates. The Federal Reserve cannot rule out the turnover in mortgage rates, but still they are partially responsible for this due to its efforts to battle inflation. However, mortgage lenders monitor their actions closely and adjust their rates to contain this surge. Now a trend has been created. Whenever the Federal Reserve System, Fed, hikes up rates, the mortgage rates follow suit. This has been happening all year, which eventually has led to the current rates that have been firmly positioned at a consistently high level. The battle carried out by the Federal Reserve System against inflation is slowly reaching headlines and gives us hope for a possible end to this. What does this mean for those in the market for a new home? The new normal is one of higher rates that will continue to pummel buyers well into 2024. Are you also in hopes for a reprieve? Sadly, it may not be coming soon. It is true that a clear economic downturn could bring the mortgage rates lower, but in the contrary, this would have a noticeable impact on home price appreciation. How will this affect the average American family? Unfortunately, this might not be a good time to anyone who has been waiting for the perfect moment to purchase a home. According to expert predictions, home price appreciation will hover at a low to mid single-digit pace, which will be modest at best. Prospective sellers and buyers are uncertain of the best possible pathway of action, with both mortgage and home prices being at a soaring rate. The median sale price for an existing home in the United States was an astonishing $394,300 in November of 2023. This comes with a 3-month streak of continual year-over-year price increases. The 30-year mortgage interest rate makes matters worse, as it is currently sitting at an average of 7.69% as of early November. It is true that coming down from the peaks above 8% is great, but still, we face staggeringly high rates not seen in over 2 decades. People are concerned about the fluctuations in mortgage rates as they naturally seek for the best situation to buy or sell their homes. However, the National Association of Realtors chief economist, Lawrence Yun, has some good news. It was stated that we're about to see a surge of buyers and sellers entering the market in the near future. Americans will have a great shot at making their property dreams come true, and that's with the mortgage rates decline. Here's a tip for the sellers and buyers out there. Yun predicted that sales may even increase by up to 15% next year. This would be the perfect time for sellers to put their homes on the market and buyers to take advantage of lower rates. However, there's more to this story. The leader of the economics team at Redfin, Chen Zhao, suggests that rates will likely remain above 6%, even though housing sales are likely to increase next year. This means that the rise in sales may be somewhat steady. And now, for some more good news. Selma Hepp, the chief economist at CoreLogic, states that home sales activity in 2024 is expected to be boosted by lower mortgage rates compared to the previous year. How does this affect you? This will come in handy if you're looking to sell your home. As mortgage rates are lowered, buyers will have more potential and means to purchase a home. This increases demand. This can lead to more sellers willing to trade in their existing homes, which adds more inventory on the market and a higher likelihood of successful transactions. This news benefits buyers as well. More inventory and eager sellers means you might have better options and more competitive prices. It's a win-win situation. Here's a question. Will housing inventory increase? The total number of homes for sale as of September this year was a mere 1.13 million units, compared to 1.23 million last year. And that's a staggering 8.1% decline. The numbers speak for themselves. What does this mean for buyers? Fighting over fewer homes could eventually lead to bidding wars and prices escalating again. Note that this issue impacts sellers as well. With a low number of available homes, sellers are impacted with fewer options to list their properties. Fueling this issue, the 3.4-month supply is far below the balanced market range of 5 to 6 months, indicating a lack of new constructions to meet the rising demand. The constrained inventory is a worrying trend that can hinder economic growth in the long run. The reason behind this is the impact of this shortfall is magnified when one considers the squeeze on would-be homebuyers, who have plenty of reasons to get into the market, including low interest rates, mortgage incentives, and remote working arrangements. There are two ways we can expect an improvement in inventory levels: either a surge in homeowners listing their existing properties, or a massive influx of new home constructions hitting the market. Not to bring you down, but both of these options are unlikely to happen at this point. In all of this darkness, there's a ray of hope. An increase in housing inventory is expected by 2024, according to expert economist Yun. Obviously, this won't solve these issues in a click, but it's better than nothing. Yun predicts a desperate need for more home constructions, which is likely to happen, and existing homeowners will be more willing to sell their homes and move on. Here's a fun fact. There's an extra factor contributing to the inventory shortage, and that is low mortgage rates. Do you know why many homeowners are hesitant to sell their homes? It's due to the fear of not being able to get the low rates again if they buy a new home, since they're locked into low rates right now. Homeowners may make a move once the rates start to make a move upwards too. So is the market in favor of the buyer then? No! The skyrocketing mortgage rates are to blame. First-time buyers and even seasoned homeowners face challenges to make ends meet due to the average interest rate for a 30-year fixed mortgage rate is sitting above 8%. Prospective buyers were seriously offended when the Federal Reserve took their latest move to increase the benchmark rate. Further upheaval in the mortgage rates could lead to an eventual drop in housing prices, and that is if this pattern continues. The real estate market is not in a good state currently, and this calls to take a comprehensive look at the whole process of buying a home. There's a lot to consider before jumping into purchasing, like exploring different financial possibilities or identifying the vast interest rates available. Experts predict a few rate cuts in 2024, but this depends solely on inflation behavior and could easily shift. In fact, the Federal Reserve has already begun to raise prices in response to growing inflation, with September of 2023 seeing a rate of 3.7%. It's not at the target rate of 2%, even though this is an improvement compared to the worst of the inflationary period. Let's relate this to an average American again. If inflation continues, rates will spike up, which doesn't sound so good. Or, if inflation fades off, there would be a rate cut instead. It's hard to say, but it's best to keep an eye out on inflation trends and staying informed about the Fed's decisions. The worst part is that many people don't know what they can do to tackle these problems. However, this situation cannot be taken lightly, and if so, could even lead to a catastrophe worse than that of the 2008 global financial crisis. Some say this could even be a situation similar to the Great Depression of 1929. Need I remind that more than 10 million Americans lost their homes to foreclosure in this period, and the number of states with rising joblessness claims were insane. It's hard to overlook the fact that the signs point towards an impending decline. The Federal Reserve of Dallas states signs of a brewing U.S. housing bubble could have serious consequences. People buying houses out of fear of missing out can cause some serious damage to prices, which could rise beyond reachable levels. Another important fact: there's no consensus among experts regarding the state of the U.S. housing market. Some are optimistic, and some are running for shelter. The deputy chief economist of Freddie Mac, Len Kiefer, shows three defining characteristics of a housing bubble: speculation-driven price growth, credit expansion fueling bubbles, and an eventual bubble pop. Len disagrees with many experts as he says that the recent price growth in the U.S. housing market was not solely driven by speculation or credit expansion. He claims it's rather due to several other fundamental reasons behind the recent price surge. These said reasons include record low mortgage rates and a fundamental shift in housing demand, which has led to an overall increase in the housing demand and subsequently increased prices. Even though the U.S. housing market is experiencing price surges, it's not yet on the verge of a bubble. Thank you so much for watching, and please make sure you hit subscribe if you enjoyed the video. And leave a comment down below letting me know what you think can be done to prevent the upcoming housing crash.